Hello everyone, welcome to C.A.S.H. Today we will learn the concept of terminology used in balance sheet. Balance sheets are full of strange words, debtors, creditors, inventory, share capital, plant and machinery, etc. But why do we use these names? Today I'll explain the real meaning and the logic behind every balance sheet term in the simplest way possible. Let's start. So today in this video we'll learn plant and machinery, furniture and fixture, investment, loans and advances. In this will cover in part 1 and I will try to cover this in part 2 and so on. So let's start with plant and machinery. Plant and machinery, why we use these terms? Machinery, we all know, it can be a single machine or group of machine, but separate machines altogether. Which means you have tailoring machine and one DC motor. These are all machines, but these are separate. This is separate. But when we say plant, this is combination of machinery and other parts which are linked together or work together like a total system or production system. For example, let's consider a flour mill. I assume everybody know about flour mill and have seen the system of flour mill. You may have observed this flour mill consists of several parts like DC motor, belt, grinding plates inside this machine or this inside the box, and this is funnel, and these are all machines. Now these are linked together in such a way that if any of the machine stop working, then the entire production system will should be stopped. For example, if DC motor get repaired today, then you can't run the whole flour mill for that day. If this belt torn today, then there is no production. Then again, if this funnel breaks out, then there is no production. And if the grinding plates break, then there is no production. Which means all these machineries link together to form a system. So this whole thing together is called plant. In bigger terms, when we talk about company, you will see that chips manufacturing production, and you might have heard the name called hydropower plant, nuclear power plant. So those are the biggest production systems which are used in company. So let's understand the topic of furniture and fixture. Furniture, which is a asset not fixed to building or anything, which can be movable. For example, chairs, sofa, cart, bookshelf, etc. Fixtures in another way, they are also asset which are fixed to building and can't movable. For example, fan, AC, light bulbs, and bookshelves. Why bookshelf here also and here also? Because this bookshelf, if you can move, then it is a furniture. This bookshelf, if you can't move and if it is fixed to wall, then it is a fixture. Now, what about investments? Investments are the amount you give to someone, which may be an entity or individual person, and expect some return on that amount. For example, if you invest 1 lakh in FD today, you are expecting some return for this 1 lakh. That is called interest, which may be 7 or 8%. Usually, the FD gives this much of interest to the investor within agreed period. So investor will get interest and principal part. Loans and advances. Advances are money or the amount paid before the receipt of goods or services. Let's say, for example, you recharge today for next 2 months, which means you haven't yet received the service, but you are paying in advance. And for example, let's say you pay a salary in advance to your employee, then this comes under the advances. Another example is you want to book a site in your name so that that site will be registered in your name only. So you pay some advance today and pay the balance in future. When it comes to loan, this loan is something you pay to some individual or entity and obligation to be repaid whether in installment or lump sum within a particular given period with charges called interest, which means we charge interest to the borrower and the person who gives loan is called lender. So lender will get principal amount, the amount which he has given, and interest on that, the return he expect from the borrower within agreed period. So by seeing this, you may get confused with investment and loans because these two terms what I explained now are similar in nature. If you see the amount to any individual and the same amount you give to any entity or individual. Next, you expect some return, and here also you expect some return called interest. Here also you will get interest and principal within agreed period. Here also you get interest and principal within agreed period. So what is the difference between loan and investment? Investments are like you are giving money to someone to earn income, which is called return on investment. Like you invest in FD and expect some return as interest around 7 to 8%. You may invest in mutual fund and you may invest in stocks, etc. Here you give money to help someone who is in need of money, and on that amount you expect the return. Like that is interest also. Like you may give to money to debtors, employees for house construction, etc. Let's consider, for example, the person wants to build a house and he is in need of money. Then he will approach the bank and ask for money. The bank says, if I give this money to you, then I will charge interest. The person will ask, why? I am repaying your amount in future. Why you charge interest to me? Then the bank explains that if I have invested this amount in FD or mutual fund or in other stocks, I might have got some return on investment. So now because of I am giving this money to you, I am losing that return, so I am charging you the interest. So this is the concept of interest being charged on loan. If instead of giving loan to someone, the bank or the person or the company may have invested somewhere and earned some return on that investment. So to compensate that return, here it is charged interest. And if you observe, loan is given to someone who is in need of money. You are not giving some money to someone just because you just keep it, then it is investment. If someone asks you the money, then that is loan. You are only giving the money, then it is investment. And in both ways, you are expecting some return. So this brings us to the end of part 1 of our balance sheet terminology series. If you understood these concepts clearly and you are enjoying this step-by-step journey, make sure to like, share and subscribe because in part 2 we are going even deeper. Thanks for watching. I will see you in part 2.